insurance system. Who wants to go? Who wants to tackle that? Anybody? Nobody? Okay, never mind.
I can add some honest thoughts. I mean, I don't have an agenda here. I can tell you, I mean, I think that there are attorneys out there that pursue cases that probably they shouldn't pursue. I mean, that doesn't mean that that's certainly in the minority. But, there are things about the system that may allow them to, try to pursue a claim that may lack merit, and they push it in the litigation, and the insurance company has to deal with it. But I guess the thing about it, though, I guess from my perspective, is that, just like with anything, there's the good and the bad. I mean, we have all kinds of examples of capitalism, doing the wrong things for our society, but we still hang on to it. So I think that, when you also look at the volume of litigation, you got to understand that car accidents still are like the most deadly thing in our society, unfortunately. We hope that we're going to get past it, but when you have that many accidents happening and that many people's rights being affected, it produces a lot of litigation. So I think that there are possible ways to try to streamline some of the litigation so that there aren't so many different lawsuits out there. That's part of the issue. CPAN is not against those ideas of how we could make the litigation side of things more efficient.
Pete, did you want to?
Yeah, thank you. Is this working now?
Yep.
Yes,
Okay, excellent. The law is designed to have limitations on tort liability, and I'm not an attorney, but Steve will correct me if I'm wrong here, but I think it's reduced the incidents, at least from 1972 and so on. I think we saw figures from Renee that, prior to no fault, the annual litigation was about 29,000 cases, I think, filed annually. In 2014, there was roughly, maybe 15,000 cases filed. And what's interesting is there's been a decrease even in the third-party actions, which is the pain and suffering awards. That's the exception to the rule that allows a no-fault suit to occur. If you have what's called a threshold injury, where there's death, a serious impairment of important body function, or a serious permanent disfigurement, the law allows a lawsuit in order to compensate those folks for what are called non-economic damages. The incidence of those cases kind of fluctuates depending upon where the court is, the Supreme Court. After the Kreiner decision, which was back in 2003, 2004, in that neighborhood, we saw a reduction in the tort liability cases, and then there was a McCormick case in 2010 roughly, and we saw a little bump up in the cases because of the standard changed as a result of the Supreme Court decision. But during that whole period of time, what we've seen is that the first-party litigation, which is not the tort stuff where you're going after pain and suffering, but you're arguing over what the fee level ought to be or how much treatment is appropriate, things like that, we've seen a continual increase in that type of case. And the law wasn't designed to limit that type of argument in a legal setting. So we've seen more on the first-party side. I think I'm getting this right.
Yeah, you're right.
Rather than the third-party litigation. So what's happened is, the legal activity has shifted, and to the area that the law actually allows that type of litigation.
I just want to add one more thing, too. There was a decision by the Supreme Court in 2005 that created essentially, or took away a rule. Let me back up here. The No-Fault Act says you have to sue a no-fault insurer within a year if they deny you a benefit. But before 2005, you could toll that time period. You could submit the claim, and the insurance company had to then tell you whether or not they're actually going to pay it. 2005, the Supreme Court said, we're not going to toll that one-year rule anymore. So what happens to me is that a person walks into my office and says, hey, I incurred this medical bill 11 months ago. I need to get it paid. There's no time for me to try to get it paid. I have to file a lawsuit now. And that's a change that I think dramatically increased the amount of first-party no-fault cases, because attorneys like me will be committing malpractice if we don't file within a year.
I also want to mention that we are joined on the stage by Laura
Appel.
Appel?
Yep.
Appel from the Health and Hospital Association, who will also be here to answer questions. And I would also like to point out, too, I should have mentioned this at the beginning, so nobody sue me. We are actually videotaping this presentation. It'll be on my website, so if there's anything you missed or you want to share this with some friends, it'll be available. Okay, so Don would like to know, if you get into an accident and you don't have auto no fault, will Medicare cover the expenses? Medicare, Medicaid. What happens if you don't have?
I would do a lot of work on Medicare, so I guess I'll take a stab at that. I'm Laura from the Health and Hospital Association. All the hospitals in the state are my members, so I'm kind of represent hospitals, Chamber of Commerce for hospitals is the way I put it. Yes, Medicare will reimburse for injuries you have if there's no-fault coverage to assist you. But please remember that Medicare is a very different coverage than no-fault. No-fault goes, and as Erica so eloquently points out, no-fault goes to all of the needs that people have after an accident. I can assure you that there is nothing in the Medicare coverage that helps you live at home on an ongoing basis with your activities of daily living. And I don't mean to go after the men in the audience, but I used to have a job similar to Renee's at DIFS, although it was called the Insurance Bureau. And some gentlemen would call me and say, if I'm in an accident, I don't need that activities of daily living or the somebody to help me with my lawn or anything like that, or my laundry. My wife does that. And I would also often say, what if she's in the accident? And so Medicare will pop in and family members can help, but it's not the same. But if you need hospitalization of any sort, we will take you at the front door and figure out what to do for you and worry about the money later.
Can I also
Sure.
we have several clients that come to us that have Medicare as their primary health insurance benefit. And a total for a year for physical therapy is $3,700. So that's a pretty limited benefit. Just to put into perspective that I've been going to therapy 3 to 5 times a week for the last 14 years on an ongoing basis. So folks with Medicare, even Blue Cross or a health insurance policy, oftentimes private health insurance policy like Blue Cross has a limit of 50 visits a year. That's combined therapy, PT, occupational therapy, speech. None of them provide for any vocational rehabilitation or anything of that matter. So while it may pick up some of the costs, it doesn't provide for quite a lot.
Okay, thank you. Phil would like to know, why is the MCCA exempt from public review? I think we talked a little bit about that. But
Either one of us can handle that.
Well,
Go ahead.
I'd be happy to. Well, you have to remember it was incorporated as a mandate on the insurance companies. I heard a statement earlier that we pay an assessment, and indirectly every consumer does. You pay, as part of your premium, the money that actually ends up at the MCCA to reimburse the insurance companies, but only after the original claim has been paid. So, and again, as I indicated, the original design of the MCCA wasn't really technically to support the payment of these claims. It was to support the solvency of the insurance companies, which couldn't find reinsurance in the private market back in 1972. It wasn't a product that was readily available because the unlimited medical mandate was so new in the marketplace that there wasn't a product for it. So what we have is a mandatory reinsurance participation on the insurance companies. They pay the assessment. If they don't pay it, they come to their door, not your door. And what happens is it's designed to support the solvency of the company, because we don't get $1 from the MCCA until the claim is paid. And the liability for the unlimited medical benefit is on the books of the insurance company. So the insurers are very protective of that reinsurance fund because it's a backstop to their solvency. And so, it was designed as a private nonprofit incorporation, association, I should say. It, in the statute, said it was exempt from open meetings and the Freedom of Information Act by design, because, no offense to the legislator here, but it was concerned of the, quote, political meddling that could occur and threaten the solvency of the companies out there. In fact, we had huge political pressures back in the late 1980s because of the surplus within that fund on an actuarial basis, to provide a $185 rebate to every citizen in the state of Michigan. Now, it's kind of weird because the insurance companies paid in and the rebate went back to the consumer, and again, ultimately, the consumer pays that money. But the insurance industry is very protective of that fund, and again, I'd encourage anybody that's interested in it to go to the website of the MCCA. There's more information there that I can ascertain and figure out, and the claims that this is a private organization is not open to public scrutiny, I think runs hollow in the sense that the data is there. The lawsuit involves some very minor actuarial assumptions that some folks would like to see disclosed. And again, the insurance industry is basically saying it's our liability. We believe that we have to protect that as an asset. And anytime that we get this political involvement, if you will, it always seems to affect our ratings with the rating agency. So yes, we're very protective of that fund. We're very protective of, it'd be like insisting that you see my lease agreement with my office. I mean, it's not relative to the benefit that's being paid to the extent that the obligation to pay that benefit is one of the insurer, and if the insurer doesn't pay, they get sued. The MCCA doesn't get sued. I mean, this is a third-party mechanism to help support the solvency of the companies, and that's quite frankly why we're so protective of that.
So I'm just going to follow up on that, only because I'm curious if anybody knows the answer to this or any input. But in 1998, Governor Engler took basically 1/5 of that fund out and rebated the policy holders. It just happened to be an election year.
Actually, I can tell you all about that.
Yeah, please do. please do.
There were some House Democrats that thought the way that they could take control back of the House would be to force this rebate, and it did not work. But there was legislation to ask for a big chunk of the money. The fund was in surplus. There was legislation to ask for a big chunk of the money to go back to policyholders. The legislation never passed. The checks didn't come from the state. What happened was there was a meeting of insurers and the front office, the administration, and I believe it was strongly suggested that to get out of this pinch, that some of the surplus money be passed back to policyholders based on what number of cars you had at the time on a date certain. The MCCA agreed to disperse through its insurer members $180 per car. So it wasn't actually a public action, but there was a lot of political pressure to do it. Is that fair?
Very fair. Yeah. Thank you.
Thank you for answering
And
that.
the problem,
now I know.
And the problem with that is that if you do that, and if you raid that fund, it's just a backdoor tax increase because it has to be made up at some point in time. So it just increases the MCA fees later and to make up so you have enough money in that fund to make sure you pay all the bills. It's a very unique system, and that is probably the only one I've heard of that you prepay into the MCCA the coverage for everyone's lifetime. So the year that they are injured is that there is an actuary that figures out, approximates how much money it's going to cost for that person's lifetime to take care of that person and give them care. And that has to be prepaid into the fund. That's why you have such a large fund of $20 billion. But the fund uses $1 billion a day. So if that fund were to end tomorrow, it would use up, $1 billion a year. So it uses up $1 billion a year. So if it ends tomorrow, you start putting money in it, there would be enough money in that fund still to take care of everybody's lifetime benefits for the rest of their lives without putting another dime in it.
Right. Some random staffer suggested we might put that surplus in a trust and never have to really charge people as much again, but they didn't listen to her.
No, it didn't work either.
Laura wants to know if Senate Bill 248 passes, what will happen to the $20 billion that's currently in the fund? And she states that, she wants to know, will it be returned to the taxpayers? And she feels that there is no way it will be used.
If I may?
Do you understand that?
Yep.
Okay.
Number one, as Tom's just eloquently said, every year, that $150 that's assessed this year is an estimate by the MCCA for the estimated number of folks that will be critically injured in their calendar year, which runs July 1 to June 30th, that $150 per vehicle will be enough money in order to support the catastrophic claims that are created within that period of time. So the 150, as Tom said, is enough to basically care for those individuals' long-term care from here on out. Now, it was mentioned earlier that the legislation would return that money to the insurance companies. That's not accurate. Section 3104, sub 37, I looked it up, of the bill, Senate Bill 248, any funds remaining in the MCCA at the expiration of its obligations, and that's going to be 60, 70 years down the road potentially, any funds remaining will then revert to the new MCCA fund and support the ongoing claims on an ongoing basis. So I just want to make that clarification. So no, the funds will never go back to the insurers. Those are dedicated to the injured individuals, and under the proposed legislation, as I said, any remaining funds, and it's designed not to have any, quite frankly, but any remaining funds, if there are any, would go back to the new fund that supports those catastrophic injuries.
My understanding of the concern about how the money could be transferred out of the MCCA and to the insurance companies is that prior to the end date of the MCCA, which is when they pay their last claim, they could declare a surplus a year or 2 or 3 or 4 or 5 years before, and then take that money in. That's my understanding of the concern. Perhaps I'm mistaken, but it's not just what happens at the moment the MCCA dissolves. It's what happens the 60 and 70 years leading up to that moment.
There's no statutory authority to do that. There have to be a change in the law for that to occur.
They can declare a surplus, can't they, and distribute to their members?
They can adjust on an annual basis and collect less, but we're talking about the last year of operation.
My understanding is that they can declare a surplus in their code of operations. They can declare a surplus and then take it back in.
And I think it goes to the intent of the legislation. There's not the intent of this legislation or anybody else to do that here. The intent, and I've sat through the committee hearing where they discussed this, and they wanted to make sure that that money went to the new MCCA and it did not go back in. Very purposely, the legislature wanted to make sure that that could not happen. And they've written the law in order to make sure that happens. So it isn't the intent. Now, there could be a loophole there somewhere, but it's certainly not the intent for that to happen. And maybe that, we need to work with them and try to shore that up to make sure that can happen, because that's not the intent of legislation. It's not what the insurance companies want, and certainly not what the legislature wants.
So moving on, Joyce would like to know, the D insurance is not part of 248, right? That's a whole separate issue.
Yes.
So the Detroit special insurance for Detroit is not part of this bill, but she did ask, and I think, Steve, you touched on this a little bit, if there is a discounted insurance for Detroiters, will it apply to people living at 10 and Kelly? And Joyce is from Roseville, so that's appropriate. So,
one thing I didn't explain is that within the bill, it's not just limited to Detroit. It says that this type of policy can be sold in any municipality where they can prove that over 35% of their motorists are uninsured. The proposed bill right now doesn't really define how that analysis is done, so there are concerns about whether a municipality could easily try to put up some numbers that say that they meet that threshold and they really don't. But that's what allows a municipality to sell these discounted policies, which is another reason why you can see how these policies could spread like wildfire throughout the state.
And I think yet it's important to take a look at what Mayor Duggan is trying to do here. He's got a city that he can't get young people to move into because it costs him $4,000 or $5,000 to insure a car. And so he's trying to do something to lower those costs to get people to move into the city. So he's trying to, and he's done a complete analysis of this, of where he can make his savings. And his savings, he believes, and this is the former CEO of a hospital, that is in the medical area. If he offers them an option to not have to buy unlimited, but to buy $275,000 worth of coverage, and if they do that. And he's also got a city where over 50% of the drivers are uninsured. So automatically those people are not being covered under no fault. They're being covered under Medicaid or Medicare or something else if they get into an accident. So he's trying to get more people insured. He's trying to find a way to do that to make it cost effective. So he's come up with this D-insurance plan, which gives people an option.
Sorry, go ahead.
Oh, please.
I guess for me, and I'm not an expert in the policy of D-insurance, but for me this resembles the point that was made earlier about choice and people having the ability to make choice. And I think that The unfortunate part of allowing people to make a choice like that is that you have no way, most people, myself included, my parents included, had no way of knowing the extent of care or the cost of care that's required for the injuries that can be sustained. So you're potentially allowing somebody that doesn't understand the kind of cost that they or their family members will end up incurring over a lifetime to make a pretty detrimental choice. And I think that's unfair.
Why should I pay more because I live 2 miles from 8 Mile?
Well, that's
Because
exactly
you're going to
our
end
point.
up paying for them anyway when they end up on Medicaid.
I think the other
Pay
thing
for it
about,
now or pay for it
I
in
think the other
taxes.
thing about the de-insurance, and this gets a little more esoteric, but when you look at the analysis, the costs in Detroit are double what they are outside of Detroit, both in terms of frequency and severity. And limiting the amount that people have to spend doesn't necessarily mean that we're going to deal with either one of those problems. I mean, if you have twice as many cases, you can still have twice as many cases. If people are committing fraud in the city of Detroit or building cases so that somebody calls 1-800-411-PAIN and the attorney says you got to build your case, there will still be a lot of incentive to do that. And you can, one of the things we always talk about in healthcare is if you cut my price, if it's a not terribly honest provider, if you cut my price, I'll just do more of them. And so I think that what we see about de-insurance is we're going to sacrifice a program that helps people to the people who are committing fraud or at least inappropriateness of care, and we'd rather work at the fraud and inappropriateness before we work at reducing the benefit.
So why am I paying more? I live 2 miles from 8 Mile. My son lives here in Sterling Heights and has 4 vehicles, and I pay almost as much insurance as he does. Why is that fair?
I don't think it is. Sorry.
Sterling Heights, and I live in Roseville.
Yeah. If
Go
I-
ahead.
Just
Go ahead.
a quick technical point. I mean, I mentioned it earlier. This is a presumption on my part, but are you on Medicare?
No.
Okay, well, then my point's not taken very well then, never mind.
Well, I just wanted to say that I can't count how many times people have asked me, why are my rates so high? And the answer is not a simple one. It's not just about no fault. If you look at your declaration page and you see the itemizations of coverage, you will notice that no fault only makes up maybe between 40 and maybe 60% based on where you're at, but maybe not even that high. A lot of it has to do with other forms of coverages. So if you're talking about whether these reforms are going to help your situation, certainly there's nothing in these proposed bills that guarantees they're going to lower your rates over time, and there are other parts of your insurance coverages that aren't even going to be affected at all by these reforms.
No-fault insurance is the same as any other product you buy, and that you can't lower the cost of buying it until you lower the cost of making it. And so as long as you have these wonderful benefits in it, and then without certain restrictions on what people can bill and what they can charge and everything else, you're going to get the same thing. So unless you put some type of cost restriction, so either you have to limit the coverage and change the coverage, which this bill does not do, change the coverage that you get if you want to cut some cost, or you can try to work and make and deliver those same costs at a lower price. And that's what Senate Bill 248 tries to do. And again, it's not a huge rate, 10%, but 10% is pretty good. But it's not a huge rate. If you want to go beyond 10%, you really need to change the coverage that you're going to get. And I don't think at this point in time there's the appetite in the legislature to do that.
But I would say that for the difference between Roseville and Sterling Heights, I mean, Erica mentioned earlier, hospital. She has her charges. She charges everybody the same thing. She accepts different payment based on, can I bill electronically, and it's a lot less cumbersome, and I have to pay less to do that transaction. I'll give you a discount. Hospitals have charge masters. My charge master for someone living in Roseville, this will take St. John Macomb right up here, right up the road. The charge master for St. John Macomb is the same whether you're in Roseville or Sterling Heights. The differential in your premium related to healthcare costs is not explained by differential in underlying costs. There's one charge for whatever, there's not one charge. For each thing you need, there's a charge for that. And what we accept in payment can be debated. and maybe it should be less, or we would say it should be more, or there's services you need that somebody said you don't, whatever. But I don't change, my members don't change their rates based on where you live.
But they do have it for what they accept for payment. As an example, if you go ahead and get a CAT scan on your neck.
But that doesn't explain the difference between her son's insurance rates and her insurance rates.
That's because, I'm sure it's because of age or some other things
It could be because
Could be where
she's
they live.
within 2 miles of Detroit and he's within 15 miles of Detroit.
Absolutely.
And so the geographic rating is what's impacting that.
So we've gone past 8 o'clock, and I still have a lot of questions. If you want to stick around, I'd really appreciate it. If you feel it's late and you got to leave, I understand. But we are videotaping this thing.
We're done.
And I want to, and they drove such a long way here. We want to keep them here as long as possible. But I want to keep going just because we are videotaping this, and I think this discussion is extremely important. So the school, I hope you don't mind. You're not going to lock us in. But we're going to go ahead and we're going to keep going. And if you have to leave, thank you so much for coming. I really appreciate it. I would really also appreciate your feedback on not only this presentation, but I'd like to know of any other types of town halls that you would like to see us put on. So again, thank you very much. So,
Can I make a quick point real quick?
Yeah, you sure can.
Not to take issue with Tom, but my understanding of SB 248 is that it does not guarantee that you're going to get a 10% reduction in your premium. It says, if I remember correctly, $100 off your premium for the first 2 years or so, and then beyond that, nothing else is guaranteed. Now, it might be the case that $100 may be approximately 10% of some people's insurance policies,
Yeah.
but I just don't want anybody to walk out of here thinking that SB 248 passes, I'm going to get a 10% reduction in your premium.
Like the slide said $100 per car. Okay.
Again, we have a lot of questions, and I hate to do follow-ups, but I got to follow up. Do insurance companies use credit scores when they're?
Yes.
They do?
Yes.
Can you explain why we use credit score when you're?
Well, let me correct that. We don't use credit scores per se. I don't use your FICO score to assess your insurance risk. What the insurance companies have found, and it's been validated in numerous studies, and it's used in virtually every state except California, I think Massachusetts and Hawaii, is that there's certain elements within your credit record that correlate very strongly with insurance loss. And I'm not an actuary, and I don't understand the science of it, but to oversimplify things is what we've found is a correlation between people that are responsible with their credit also seem to be responsible in other aspects of their lives, including their behavior that affects their insurance risk. So these we call them credit-based insurance scores. These calculations, using some of your historical information in your credit report, strongly correlate with insurance losses. It's been demonstrated in various studies, as I said. The most kind of noteworthy one was conducted back down in Texas, and I can't remember the year. But even the insurance commissioner started out, and he admits that he had a bias towards the fact that he thought this was just, the wrong thing to do. But even he was convinced that, yeah, there is a legitimate purpose for the use of credit-based insurance scoring. And so basically it's one of the tools that are used to try to project insurance loss, insurance risk. And so, yes, it's used as a factor in Michigan. It was authorized under legislation about, 5 years ago now, Dyke, I think. And we had a huge debate over it. The former insurance commissioner under the Granholm administration moved to ban the use of credit-based insurance scoring by rule. The industry challenged that in court, and we won all the way up to the state Supreme Court level. The next session in the legislature, we actually adopted regulation that governs the use of credit-based insurance scoring here in Michigan on a bipartisan basis. In fact, I always like to highlight one of the Mayor Duggan's people, Lisa Howes, was one of the sponsors of one of our bills and dealing with credit legislation. So yeah, that's been in place for a number of years.
So the next question, and we just really kind of touched base on this, but I'll go ahead and ask it again if anybody else has anything to add. But Betty Lou would like to know, how is the new law going to lower the cost of auto policies, and will it lower the MCCA costs?
No, it's, again,
Good.
Yeah.
it's mandated, that's $100, it freezes your current rate, and unless you change, but somehow your driving patterns change, but it freezes the current rate as of January 1st of next year, and as of June 1st, then your rates would go down by $100 per car, and that would continue, that freeze, and that would continue for at least 2 years.
Yeah, and actually the rate reduction could be more. The fee schedule, we talked about 150% of Medicare. If that results in savings that exceed $100 per vehicle, because of the mandate in Michigan that, you know, we can't be excessive, we can't be inadequate, or we can't be unfairly discriminatory on our rates. And all of our rates are filed with the Department of Insurance, even though we can use them immediately. You know, that has to be reflected on an actuarial basis in future rates. So the 100 per vehicle is a minimum in the first 2 years, and potentially, depending upon what savings materialize as a result of the fee schedule, as a result of the Fraud Bureau, and all the other things to rein in costs, there could be additional savings.
I just want to make the point that in the initial versions of the bill, and I haven't looked at it lately, so you guys will correct me if I'm wrong, the MCCA assessment to the insurers on a per-car basis last year was $186 a car. This year it's $150 a car. And that reflects the lower risk that the MCCA is seeing, according to their actuaries. My understanding is that $36 difference is included in the $100. Is that accurate?
I think that is right.
So the change, $36 of that has already been recognized by policyholders. So is there more to come if we impose a government-mandated fee schedule that's perhaps doesn't meet the cost of delivering care? You know, it's 100% certain that the providers that care for you will receive a reduction in payment. It's less certain how that will translate back to the policyholders.
Well, and without these reforms, it's 100% certain that our costs will continue to escalate. Your costs will go up, they'll be passed on to auto no-fault consumers, and that'll be passed along in higher premiums. So we can choose to do nothing, and that's what we're trying to avoid. This bill actually maintains the lifetime benefit. I'll not use the word unlimited, even though Renee does.
I'll hold you to that in the future, too.
You know, it maintains the lifetime benefit. It does not touch the treatment, the standard of care found under our no-fault system. What it attempts to do is address what we think are out-of-line charges. And Laura talked about charges, and you have to be cognizant of the words that are used up here. Charges are one thing. They charge everybody the same, but what they accept in payment varies greatly. And sometimes 4 and 5 times differences, as we talked about earlier. So, you know, as I say, if we choose to do nothing, that's what you'll get, nothing. In fact, you'll probably get increased costs because costs go up every day. What we're trying to do is maintain the structure of the system that we have because it's a wonderful benefit for the consumer, no doubt about it. It's unmatched anywhere in the country. But without some reforms, without some restraints, without some treatment protocols, costs will continue to escalate.
But without those things for the last 5 years, the cost went down $36 a car.
And it went down, but the cost for the MCCA increased by $100 million last year. So the reason why it went down is because the investments did that. The investments did better than they did in 2008 and 2009. And because the investments have returned, they don't need as much money to cover. But you can't always guarantee it. This year is going to be a bad year.
If I can just, I guess,
Yeah, please.
one thing that I wanted to add is even though the standard of care won't necessarily change under this bill, the number of providers in this state will change. If you're asking me as a small business owner, and I'm not sure how this affects hospitals or larger organizations, but if you're asking me to accept less and not giving any kind of cost savings in terms of doing business in exchange for that, then it puts a lot of pressure on smaller businesses like ours to provide the services that we provide. So one of the biggest differences between Michigan and other states is the access to providers. There are more providers in Michigan because there's a larger continuum of care here.
Yeah.
And I'll just add to Erica's excellent point there. I mean, just basic economics. If you increase price, supply goes up. If you decrease price, supply goes down. And so what they're talking about is a huge decrease in price. So that would decrease supply.
Well, but it doesn't address the fact that the increases in prices have left, a lot of people have left the system. I mean, we have one of the higher uninsured rates in the country here. We have a 22% uninsured population out there driving around. If you can believe, over 1 in 5 drivers does not have insurance, according to the studies that are out there. In Detroit, it's estimated somewhere between 50 and 60%. Now, the reality is, because of our comprehensive system, a lot of the folks injured in those uninsured vehicles actually get full no-fault benefits. Unless you're the owner-operator of that vehicle and chose not to insure that vehicle, you're denied all benefits. You may end up on Medicare. But every other occupant of that vehicle, either through their own policies outside of that car or as what we call an innocent third party, will receive full no-fault benefits under our law. And all of us out there pay for it. It's called the Assigned Claims Facility. And that
It's not just the owner-operator, it's also their family members.
No, they're not denied benefits. No. Ask your lawyer.
Yeah, he's right.
Well, and I also don't think you can blame the whole cost of rising auto insurance on auto no fault. I mean, there's collision and comprehension that takes up
But that's
60%
not a
of your
mandatory
bill.
coverage. You can choose to walk away from that. You don't have to purchase that coverage.
The other
Okay,
thing,
but it's still a more
because
expensive part of your bill.
there have been so many points raised about healthcare costs rising and the way medical professionals have tried to allegedly bilk the system. The insurance industry has remained pretty profitable in the state of Michigan, and that's an undeniable fact.
Well, according to Brooks Patterson, it has.
It has.
So moving
Well,
on.
we can address that too. I mean,
I'm
Oh,
sorry.
yeah,
Did I hit a nerve? Did I hit a raw nerve with the Brooks Patterson thing? Go ahead, please.
Well, no, I mean, in Michigan, and this is according, not from the insurance companies, but by the insurance commissioners who regulate the industry, is that Michigan, for every dollar they take in, they pay out $1.15 in benefits. And where the average in our state is 66 cents. So, it is not necessarily profitable to sell auto insurance in Michigan for auto insurance companies. They make money on other things. Let but me they don't answer that. Why do necessarily- they do it? A couple things. Number one, our members make money in other lines, in workers' comp and homeowners and professional liability, and business owners' policies and things of that nature. Many companies choose to be what we call in the personal lines. Personal auto policies, homeowners, things that people need for their personal lives. And yes, we make money in those other lines, and I hope we'd celebrate that, because most of them are Michigan-based companies, and when GM makes money, it's a good thing. When an insurance company makes money, they're ripping people off. So, and I'm not looking for sympathy here, but there's just a whole different perception with respect to that. And we have to file our rates with the insurance department. GM doesn't file their rates on their car. So we're a highly regulated industry. Yes, we make money in certain lines. As Tom indicated, in auto no fault, we've been one of the most unprofitable states in the country. And anybody interested in getting more data, I'd be happy to provide it. And it comes from the insurance regulators, the National Association of Insurance Commissioners. The most recent 10-year period, we're the 5th least profitable. We're number 5 out of the 50 states as far as profitability on personal auto. So when they say they're making money, it's kind of a generalized statement, and it doesn't get to the issue of no-fault reform. And I've had several members that have gotten out of writing personal auto in just the last year. Michigan Miller's up in Lansing, Michigan. EMC got out of it about 2 years ago, and they're primarily a work comp carrier now, so they decided to walk away. Affinity came in and bought over a $30 million book of personal auto back in 2005. They've left Michigan because they couldn't make any money. There's There's the ones who won't come here.
I just want to remind Pete of that when everything you just said about, you make money on some parts of it. Yes, it's good you make, that you do have to make a margin. All true for hospitals as well.
Okay,
Heavily
so
regulated industry.
So moving on. Okay, so I am going to ask him one of my own questions again. Just out of curiosity, if an insurance company comes into Michigan, is there like a buy-in for the MCCA, or how do they?
No.
No? So you just, okay.
No, the obligation's on a year-to-year basis, so there is no legacy cost, as it were, no.
Okay. So Randy would like to know, please describe a catastrophic accident victim in I think he meant a state that doesn't have no fault. What happens to them? Let's say they're at fault. He also wanted to know who Pete Lund was, and why he wants to give him no fault.
Who?
And does no fault follow party lines? And I can answer that. As far as I'm a Democrat, so the people in my caucus, I can tell you there are people on both sides of the issue. So, but the original question is, what happens in states that don't have no fault?
Yeah, well, the term traditional tort law, I think as explained in the initial presentation, what that means is that you go after the person who is at fault for the incident and you recover all your damages from that person. There are several states that still follow that system with regard to auto accidents. So if you're at fault down in Florida, either you're getting it through private health insurance if it actually covers an auto accident, or you really are going to go on Medicaid or Medicare if you're catastrophically injured and you don't have any other ways of funding your own insurance. So what happens in those other states, when we're talking about, the litigious aspect of Michigan no fault, in those other states, you only get benefits if you go through litigation, and if you're at fault, there's nothing to litigate. You're going to be out of luck.
Yeah, we're down to 12 no-fault states that kind of follow the model in Michigan, and we're the only one with the lifetime benefit.
Thank you.
Thank you.
But the other states follow the tort system as Stephen described. Most of those states, tort states, don't mandate any medical coverage. There's a few, I think about 11, that have some minimum mandatory medical pay, which ranges from about $3,000 to $25,000. So for the most part, it's a litigation situation.
Which isn't good, and that's coming from a lawyer.
So I know I said we ran over, and it's going it's 8:20, so I definitely got to cut this off in 10 minutes. So we're going to hit some questions. So consider this like the 30-second round. Yeah, keep your answers short.
The lightning round.
Lightning round. It's the lightning round. So I have to ask this. Our good friend Clarence is here tonight. Clarence doesn't live in my district, but he's. I think you all know, or most of you sitting up here know, that my colleague Pete Lucido has felt very strongly that the interest coming out of the MCCA should pay for our roads. So that's Clarence's question. Money used the MCCA money used to fix the roads using only the interest, which is our money.
I got a 5-second answer.
Please.
Fix the bodies that are injured on the roads. Don't fix the roads that need to be repaired because we drive our cars on it, right? I mean, the fund is created to fix our bodies. So my concern is that if you go and take that money and put it towards repairing the roads, you're not going to have enough money to help us make our bodies better. You're just going to repair potholes.
And this is odd coming from the provider side of it, but Tom made this point earlier. We put the money into the account today for everything we think is going to happen in the current year. And we need both those dollars that went in and all the interest they earn later. And the same thing is true if you put aside money for your child's education in 529. You don't have to save $100,000, but you do have to save $50,000. If you do it early enough, it grows. The money in the MCCA is there to care for people like Erica and pay people like my members for the care that people like Erica need. And I know I didn't want to put words on your mouth, but I really think this is something that we all agree on across the stage, which is that money's not available to pay for roads.
And the only way you can reduce the amount needed in the MCCA is if you change the future cost of what CAIR would be. And so if it's figured based on today's costs, and if you lower those costs, then potentially maybe there's money there. But if you don't lower those costs, then that money has to be there to make sure it's paying those benefits.
Okay, next question from L. Would like to know who determines if a person's injuries are serious. I think this goes back to the fraud that we were talking about. Who determines if the person's injuries are serious? The guy granting them the right to sue?
Real quick, I mean, there's a whole line of cases that deal with the standard of whether you have a threshold injury. And this gets back to when you can sue the at-fault driver. You can only sue the at-fault driver for pain and suffering if you have a threshold injury. Death, permanent serious disfigurement, which is like amputation or bad scarring, and then serious impairment of body function. We don't have enough time, certainly not 30 seconds, to explain the rules, but it's basically done through the court system.
Judy would like to know, why is the charge for the MCCA different with every insurance company? Is that true? They all pay the same.
Same.
They all pay the same.
Actually,
I was going to say, some insurance companies, when they file their rates, they file to add on administrative fees onto the MCCA assessment. So when you look at your policy, if it's $150 per vehicle, you may see $157 MCCA assessment, because there isn't anything currently in the statute that prohibits an insurance company from adding on additional administrative fees. So when you see the line item on your declarations page, you may see statutory assessments. That's what we get a lot of calls on, a lot of questions. as to why the MCCA assessment on the policy doesn't match what the MCCA assessment really is. And it's usually because your insurance company is charging you an additional fee or administrative fees on
Or
your policy.
They might pay a commission on it.
That could be.
The other thing I want to make clear is that the MCCA doesn't get the money one policyholder at a time. They don't get the money from Laura and then turn it into the MCCA, and get the money from Renee and then tomorrow get that one to the MCCA. The MCCA says, go out and count your cars, multiply the number of cars you insure by the assessment, send us a check. And then they pass that cost back to you on a policyholder basis. And they have flexibility in the way that they do that. They could do a geographic differential for those assessments. Most choose not to. But there are the commissions and administrative load. But it's not a one at a time payment. It's a one, they pay to the, insurers pay the MCCA once a year.
Sure. If I may, just as the insurance representative here, the assessment is passed on obviously as part of your premium on an annual basis. How that's displayed or reported is not governed by statute. And I'd, rather than call it administrative fee, I'd call it an allocation of overhead. I mean, that's how it's been described to me in some respects. Well, how come it's not $186 on this annual policy? Well, we allocate a certain amount of our overhead to everything. Part of that overhead goes to your liability, part of it goes to the MCCA government assessments, part of it goes to your PIP benefits. So it's kind of the administrative overhead allocation to that thing, but the law doesn't define it. The reality is that, you're charged $150 this year for each policy that you purchase. How that's allocated internally, as Laura pointed out, is really up to the insurance companies. One other point I'd make, the reduction in the MCCA this year really it came about for two primary reasons. One, better investment returns anticipated going forward, so less money would need to be collected. And two, the threshold under which the MCCA can be attached went up. In other words, prior to this year, the insurance company was responsible for the first $530,000 in liability on that PIP claim. Going forward over the next 2 years, they're responsible for $545,000. So the MCCA has less of an obligation going forward on the claims from that year, and that helped reduce that premium. So
Judy also wanted to know, can you buy insurance from another state and not pay in the MCCA?
No.
Yeah, no, that's
Well, you can.
You'd be guilty of a misdemeanor.
Not very
It's not good.
So a couple, three real quick ones, and then we'll wrap it up. David wants to know, according to the text in the law, the resolution of the rates would change. Is this true? Why or why not? I'm assuming you meant Senate Bill 248?
The resolution.
My writing wasn't too good on the right.
Yeah, shout it out.
I meant regulation. I read the fiscal analysis of it, and under the old system, the regulation was like that much verbiage, and now it's down to like this much. So my view, it seems to me that the insurance lobby wants a lot of this because they're going to be more deregulated in how they can price. That was my interpretation.
Yeah, so if 248 changes, you had mentioned about getting the reduction in cost for the 2 years, and then I think we're making an assumption that it'll be more attractive for insurance companies to come to the state. Market forces driving rates down.
Go ahead. Yeah, I mean,
I was just going to say, it's possible that there's a section in there that is because it's obsolete. It might be old language, and it's just looks like less language just because there's something that needs to be stricken out because it's just like, it might say from the period of 1996 to 1991, you do the following. Obviously, we don't need that anymore, so it might just be. To be honest, I can't remember.
yeah, the standard of filing requirements and things like that, as far as our disclosure and the filing of our rates, doesn't change under Senate Bill 248. There is a temporary reduction, mandatory reduction on premiums for the 2-year period, and after that, basically it reverts back to the current scenario where rates, again, can be inadequate, can be excessive, and they can be unfairly discriminatory, and we have to file those with the department every time we want to change them.
I do believe that they may have modified the definition of an excessive rate in 248 so that it includes the, no, not unreasonably high profit.
Wasn't mine, I mean,
No,
I know about it.
Okay, no, I thought it was modified so that it included that an insurance company couldn't charge a rate that led to an unreasonably high profit. What's that, Martha?
Oh,
That's what's, it's in there about, reasonable rates they're trying to define reasonable rates to try to narrow it down from where it is now.
Yeah,
And there's
no,
also a narrowing of the excessive rates, I think, are also
you're
defined
right,
in there.
Stephen,
There's
there was
actually,
a
that's
Senate
in
amendment
the
version
the House analysis that's in this book, has that language in there. It has a page where it talks about some of the change. What they're trying to do is make sure that nebulous, reasonable rates, trying to define it a little bit closer to something that's in reality and closer to what the costs are. And the same with unreasonable rates, the same way. They're trying to define that to try to take the lawyers out of it as much as they possibly can and get that down to something that's a little bit closer to what reality is.
Okay, last two questions. Again, we'll just try to condense our answers here. What is the lifespan, or I guess maybe life expectancy, of someone who is a paraplegic or quadriplegic? And do these folks normally have do not resuscitate orders, advanced orders?
I'm not sure what other individuals do. Fortunately, because of advances in modern medicine, I'm expected to live a full life expectancy. So I think that's something that's important to keep in mind, is that the average age of individuals in catastrophic injuries is 18 to 35. So I was 23 years old. Thanks to the lifetime benefit, this will be something that will take care of me for what should be a full life.
Yeah. So not to put any words in the questioner's mouth, but I think one of the concerns is if you don't have the benefits, so someone who is quadriplegic or paraplegic, and you don't have someone coming in to work with you on a daily basis, could that potentially shorten your lifespan? You could develop clots, have strokes.
I would say that the reduction in care could definitely lead to more secondary related complications that could result in a decreased life expectancy.
The insurance commissioner actually testified 2 years ago, and he gave what they based their actuarial studies on, and it's that the average person who's under care of the MCCA lives till they're 77. And that they'll be in the system for approximately 42 years, I think is what it is what they estimate that is. And that's actuarially what they have found. And that's obviously, that probably changes as medicine changes.
Okay. And last but not least, this goes back to the question of fraud. Wrapping this up, I'd certainly like to talk to all of you up in Lansing in regards to this. But aren't issues like fraud and abuse always prosecutable? Can't the insurance companies take the alleged offenders to court using their own team to find, team of lawyers I'm assuming, to find the cases of alleged fraud and abuse? So don't you do any internal fraud investigation, I guess is. Interestingly enough, a real quick story, being a retired firefighter, there used to be a saying in the fire service, have a fire, get a check. Because the insurance companies, it cost them too much money. It cost them more to investigate than it did just to write the check for the house. And at one point, the insurance company said, I don't care how much it costs us, we're going to start prosecuting. So how about answer that as far as...
that's one of the problems. To answer your question, don't the insurance companies investigate this? Yes, especially the larger insurance companies have dedicated what we call special investigative units trying to ferret out the fraud, and that's done on various bases. Unfortunately, what happens is once you've identified fraudulent behavior in the insurance marketplace, we can go after those folks, but there's very frequently is there enough assets to go over and recoup the cost of litigating. So it's really kind of a decision, financial decision. Do you spend $30,000 in litigation costs and things of that nature to go after something you're not going to get a return for it? So basically what we do is we chase that fraud, at least out of that insurance company. Unfortunately, those perpetrators, if they aren't prosecuted criminally, go off and perpetrate their fraud elsewhere. And so that's the design of the fraud authority. Two things it does. One, it requires insurance companies to report all suspected fraud activity to a central authority, this new fraud bureau. For the first time, we'll have a statewide database on where the perpetrators are at and where the suspected activity is. And two, it generates some money, as Tom indicated, about $2 per policy, which it'll generate about $15 million statewide. And that money has to go to local prosecutors and law enforcement agencies and others that combat fraud, so that we can actually prosecute the fraud that's out there. Because today, if I take an insurance fraud case to a prosecutor, they're complex, they're time-consuming, the return, if you will, for both the insurer and the prosecutor, it's not as sexy as other cases and so forth. It's not a high priority, unfortunately. We recognize that. That's why we believe we need to generate some revenue in order to pursue those prosecutions, much like we do with the structure called the Auto Theft Prevention Authority, which has been in place since
1986.
86.
Public Act
How
10.
did you come up with the $2 figure?
Quite frankly, we thought it was a good amount, not too excessive, to begin that process. Auto theft, which is limited to auto theft, and they've done a masterful job of reducing auto theft in this state, spends about $6.5 million annually. We wanted to double that effort with respect to the insurance fraud. Again, this is a 5-year pilot. We'll try it out. If it doesn't work, it's going to expire on its own unless the legislature decides to keep it moving.
Steve?
Real quick, just want to mention some measures that are in place right now under the current law. If you commit fraud in applying for insurance, you can then void your whole coverage. So that if you get in an accident, they find out you lied in your application, they say, sorry, you lied to us, we're not paying you anything. Also, there's a line of cases that say if you commit a fraudulent act in making your claim for benefits, they can disqualify you from benefits completely going forward. Also, if you commit or submit a fraudulent claim, you can be liable for the insurance company's attorney fees under Section 3148 of the No Fault Act. So there are some protective measures in place to at least help combat some of the fraud on the individual side. I will repeat, there are not that many measures to deal with the bad faith claims handling of insurance companies. You can get attorney fee sanctions. You can sue them for fraud as its own specific cause of action. But the stuff in between, all the stuff with the IME doctors and the adjusters relying on doctors that do 10-minute evaluations of people and have a whole mill, and they rely on these doctors and cause litigation, there's not really any good remedy for that.
Well, there's a whole chapter of the insurance code against behavior of the insurance companies that we fund the insurance department actually to enforce on us.
Yeah,
So
well,
to suggest that there isn't any regulation on our industry is just
I didn't say no regulation. I said
There's
the things
more than
like
sufficient
the
regulation.
IME doctors that make a living off of denying people benefits, they're not being put out of business.
So as you can see, this is a very lively topic of conversation, and we certainly up at the legislature have our work cut out for us to make sure that we do the right thing, not only for consumers, but for victims of auto accidents and the industry who employs, how many people does the insurance industry employ?
$150,000. 150,000 in the state. I'm sorry.
150,000
with
in the
agents
state, so
and
it's
company people. Yes.
Yeah, so it's a job provider as well, and so it's a very difficult. It's a very difficult topic, but we're working very hard on it. First of all, can you help me thank these great folks for coming all the way from Sterling Heights? Did I mention Sterling Heights is the 4th largest city in the state? I did. But thank you again for coming out. I know we ran over late. I hope you found it very informative. If you have any questions, more than welcome to contact our office. Bob and Rachel, my staff, are there, and of course you get a hold of me. Take the literature that we have available for you out in the front lobby, if you have any other ideas for any town halls or any other topics that you want to address, please give our office a call. Thank you very much, and drive home safely, please.